What's up, everyone? It's Scotty with MoneyVest. So markets here selling off pretty aggressively, with the NASDAQ here down a little bit over 2% on the day, 2.2%, trading down to 15,100. We had the S&P 500 also down over 1.6% to now under 4,900, and the Dow Jones also selling off on the back of Federal Reserve's Chairman Jerome Powell's press conference as well, in which he did mention that the rate cuts are not likely and they are going to essentially need more data and they need greater confidence in order to believe that inflation is sustainably moving down towards their 2% target. I covered that in the entire live stream, so definitely do check that out. I'm going to keep this very, very nice and short. It's not going to be a super long market update. And I'm going to reserve the technical analysis on individual stocks, the Magnificent Seven, and big tech companies for another video. So this is going to be a little bit of a shorter, quick update for all of you because I think it's really important to understand, because this market sell-off, in my opinion, is just getting started here, because there is that disappointment the markets were not looking forward to, but there was that disappointment already kind of lurking around in the markets because market expectations were so high with 6 rate cuts or as much as 7 rate cuts, and the Federal Reserve, of course, has only told us 3 in their SEP, and they've also not given us the timing of these rate cuts, which is causing additional problems and challenges for the market. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. Today is quite literally the last day if you want to join, be a part of our MoneyVest community and get access to that 16% annual discount. So links are going to be down below. And of course, you do get access to all the trade alerts, buy and sell alerts, options alerts. Everything's going to be included, as well as the intrinsic value and our fair value spreadsheets with my watch list. And of course, the 45 plus private videos and members only videos as well. So, Chairman Jerome Powell says a March rate is not likely. And they also mentioned in their statement that in considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. And the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down towards their 2% target. Now, Jerome Powell did mention that the 6-month inflation is looking good on a core PCE basis. We are sliding lower and lower, so that's actually good news, but they need to see more data. And data was kind of like the keyword of the entire meeting. I think he mentioned it over 30, 40 times in that entire press conference. And, that's really what the important thing is, that they need to get greater confidence in hopes of getting inflation data lower and lower. And that's really what's going to be the moving factor, the deciding factor for whether we get rate cuts or not. Microsoft down 2.6%, Apple down almost 2%, Amazon over 2%, Google down over 7%, Meta down over 2.5%, Nvidia, Broadcom, AMD, everything selling off. The entire NASDAQ really rolling over quite aggressively because all 11 sectors in the S&P 500 were down. In the last 1 week, we've got a little bit of a split market, but mostly technology and comm services struggling a little bit because of that rotation out of tech over to other parts of the market. So utilities and consumer defensives and energy doing really well in the last 1 week, and in the last 1 month, of course, again, a little bit of a split market as well. Natural gas prices higher, orange juice higher, gasoline, we got sugar prices, rough rice all pushing higher, with palladium, lumber prices, volatility, and oats selling off, with Bitcoin here just over 42,000 and Ether just over 2,200 as well. So if you come over to volatility, we did see a volatility spike of over 7%, back over 14, and I've been kind of emphasizing on this point that the markets will give you the opportunity. They will give you one opportunity, at least in 1 year, to dollar cost average and to be a little bit more aggressive and to start increasing that cash deployment in the market, because right now, of course, volatility is low, market's been drifting higher. So from a long perspective, as I've already mentioned, this is not the time, at least in my opinion, to be going long in the markets, considering how overbought, overextended we are, not to mention how market breadth is very concentrated in just a few stocks. Magnificent Seven are quite literally the only companies that have been pushing the markets higher, and if they start rolling over, as we saw today, a lot of them were down. So if you come over to our watch list, you'll notice that Google down 7%, did a video on them earlier, Nvidia down almost 2%, the AMD stock 2.5%, Microsoft down 2.5%, Meta down 2.5%, Amazon down over 2%, Apple almost 2%, Tesla down another 2%. So if these stocks start rolling over, NASDAQ is going to struggle. It's not a surprise. It's just what it is. So if you come over to crude oil prices, we are seeing a little bit of a momentum lower. Support level is going to stay put at $73, $74 a barrel for crude oil, and of course that resistance all the way up to 81, as much as $82, $83 per barrel for crude oil at the moment. So that is going to be that target, that resistance. And in the month of January, unfortunately, we closed up a little bit over 8%, I think. So 6% closed higher for energy prices. So it's possible that, of course, it gets affected in the AAA prices at the pump. So that is something to keep in mind for crude oil. And of course, resistance all the way up to $80, $82 per barrel moving forward, with the support levels that's going to stay put inside this green rectangle at $72, $73 a barrel for crude oil as well. Now, moving over to the S&P 500. So this right here is going to be the chart, and S&P obviously selling off with a pretty decent red candle. And there was that negative divergence that was playing out for some time, and we're starting to see that play through with a pretty significant sell-off over 1.6%. Is this going to continue? In my opinion, there is a possibility that it does, and we continue to see a little bit more potential downside here, at least down to that support of 4,800, down to 4,690, right? So 4,690 is going to be a reasonable 4.5% to as much as 5% pullback on the market, which I think is quite reasonable. Something that we can all expect in the markets to even as low as 4,600. That's going to be a 6% drawdown on the S&P from its all-time highs. I'm prepared for it. I think everyone should be prepared for it. And we are going to start looking at a lot of deals when the markets do end up selling off, let's say 6 to 8%, if there's a pullback or a correction in that range. Talking about the NASDAQ, same thing. Already starting to sell off here. RSI MACD also showing signs of some weakness. You can see that the MACD is almost crossing below that signal line and starting to break down below that 15,200 level. If you continue to see some more potential downside, that support level next is going to be at 14,500, and that's going to be about a 7% drawdown from its recent highs, which again is very, very normal, something that we are looking forward to. I'm super excited for if and when that happens, for us to dollar cost average into this market once again and start looking at deals and start deploying cash. That's exactly why it's really, really critical that we understand where volatility is, where market breadth is, where technicals are, where valuations are, and that's exactly what we cover in our entire MoneyVest community. We've got a holistic overview of the market, understanding valuations, understanding technicals, understanding breadth, understanding fundamentals, all those things, macros, and we kind of combine that together to better assess whether the risk reward is favorable or not. And right now it is getting better on the long side. So patience, patience, patience. That's exactly what we're going to employ. I'm patiently waiting, got cash sitting on the sidelines, ready to be used if and when the markets do draw down a little bit further. 14,500 to as much as under 14,000, ideal levels to start going long once again and start that process of dollar cost averaging once again if the volatility does spike to 18, 20 to as much as 36 levels. So that's all I've got for you today. Market sell-off does seem to be accelerating a little bit. Futures are slightly green once again, so we might be getting a bit of a bounce back higher after the brutal red day that we witnessed on the day today, but I will be doing a separate technical analysis on all these Magnificent 7 companies in a different video. I want to keep it nice and short, and of course I've got a Powell summary and speech to also summarize in another video as well. So lots of content coming your way, but just wanted to pop in here really quickly, kind of give you an overview of what I'm planning to do is kind of patiently wait, have cash on the sidelines. We'll be closing out my covered calls with a nice profit. And again, link's going to be down below if you want to join and be a part of our MoneyVest community as well. But overall, we already knew that something like this was going to happen because it was only a question of when and not a question of if, because as we continue to drift higher and higher, volatility continues to be low. There was that risk and reward trade-off where the risk was very, very extensive with respect to the reward potential, marginally speaking, to the upside. So that's why on the long side, it was quite unfavorable. On the short side, it was favorable, but at the same time, we needed confirmation. And right now, we're starting to see the markets roll over pretty aggressively with the RSI MACD also coming down, with a lot of Magnificent 7 stocks also struggling at the moment. So I'll be live on Friday as well for the unemployment report, but we'll see what the next couple of days look like for the markets. As always, make sure that you drop a like, subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us, and happy investing, and I'll see you all in the next video.